Good day, ladies and gentlemen, and we move on here on the Precious Metal Summit now with GoldenQueen, and we have Thomas Clay with us. He is the director of the company. Thomas, thanks for taking the time.
Thank you.
Pleasure to have you here. GoldenQueen, what are you doing? Where are you located?
Well, so this is a single asset development company. Our project is called Soledad Mountain. It's located in Southern California. It's a company that's been around a long time. The project has been in permitting for the last 10 years, and we finished the permitting effort in summer 2012.
10 years for permitting.
10 years.
That's California, huh?
It's got advantages and disadvantages.
Yeah.
The disadvantages we felt up front in the 10 years we spent to get permitted.
Okay.
The advantages are coming more to the forefront as we're actually entering construction right now, in that we basically have a paved road to site, we have power lines crossing the project, we have water on site, we have when companies talk about local infrastructure resources, we think that being 90 miles northeast of Los Angeles, being a 2-hour drive away from LAX airport, makes a big difference.
Oh yeah.
So I think that we've paid the price up front, but the permitting effort is now behind us, and we're turning now to putting the people in place and the financing in place to get the thing built.
Well, financing is one of the keywords. What are you doing by now? How is it working? How much capex you have? How do you finance it?
So the company last updated its feasibility study in late 2012, and the capex number came in around $120 million.
Oh, that's quite decent.
We think that it's doable even in this sort of environment. The project looks robust to us. My family has been a shareholder of this company for 20 plus years. We've been putting in capital over that entire period. We last put in $10 million in July 2013 to allow the start of construction, basically to demonstrate that our permits are in place, they're valid, we're able to start bulldozing, we're building the roads, we're grading the site, and we intend to participate in the future $120 million. So right now we're looking at a plain vanilla solution, 60 million debt, 60 million equity for the 120 total number. My family would intend to participate in the 60 of equity, basically pro rata to a roughly 1/3 share. And we think that this is the sort of project that actually appeals to investors in the current environment. In a safe jurisdiction in the United States, fully permitted, which is the big risk in the United States, a capex number that's doable, and a high return on capital.
So how many ounces you would produce then annually?
So in terms of annual production, we'd be coming in at around 77,000 ounces of gold and around 850,000 ounces of silver. So this is a gold-silver project. It's about 20% silver by revenue. The reserves are around 1.1, 1.2 million ounces. The resource is 2.4. And the reason for that big gap in this case is not really the economics of mining the additional resource ounces. It's much more that in our current permitted project boundary, we only have space for the 1.2 million ounces in our reserves.
Okay. Yeah.
We're limited in terms of our current heap leach pad capacity. So we think that with the 77,000 ounce annual production that I was just talking about, that already gives us 15 years of mine life with our current reserves. We'd love to eventually increase that to go after the resource ounces not in the reserves, but that'll basically require us to go back and increase the permitted project boundary. We think that's something we want to get into once we're in production, rather than right now when we have 15 years of mine life ahead of us already.
Yeah, which is a lot for an initial start, of course. Because when you achieve to widen the boundaries, you can easily go up to 25, 30 years, whatever.
Exactly.
Which is a nice opportunity for the future.
We think so, and that's really the direction that future expansion will come. In California, this project really shows its California location. The permits have really shaped the way that the project has been designed. So our throughput number is actually itself derived from our air quality emission permits. We're permitted to a certain level of dust emissions, particulate matter emissions, and from that number you can back out how many trucks you can have operating, what the throughput you can put through the crushing screening plant is, etc. So this is not the sort of project that can double its throughput and compress the mine life, that sort of thing. It's really going to be a very long-term fixture in the local community, which from the community's perspective is actually the way they'd prefer to do it. we think that it makes a lot of sense. This will be a very long-lived asset.
Coming to, as you said it already, to the economics. What are your all-in production costs?
So
after silver credits, if you want it.
So there's a significant silver credit, and in the feasibility study, after the silver credit with silver in the mid $20 range, the all-in cash costs look very good. I mean, sub $500, $400 cash cost net of the credits.
Wow.
So this is, again, partly the result of the environment, the advantages we get from the area in terms of hooking into grid power, in terms of local labor availability. I mean, local heavy equipment drivers, heavy equipment mechanics, they're all local. There's significant amount of mining and quarrying activity in the vicinity. We get very good reagent costs on cyanide, on cement, on all these other things, on gasoline.
Yes, that's all there.
It's all there, basically.
You mustn't fly in or whatever.
Exactly.
Yeah,
I mean, it's. I think it's always an experience for people coming to site for the first time. They're probably used to helicoptering out to some place in the mountains or something like this. This you literally step off your plane in LAX and you're driving off of a paved road into the site, a couple hours later. So
Wow.
It makes a big difference.
Yeah, that's really impressive, absolutely. So you said $400-500 all-in cash costs. What's about then sustaining costs, or that's the G&A and all that stuff? Is it really all in, or do we have to add another, whatever, $200 there, so that we can say you have, even in this environment, you have a margin like $600, maybe $500 net margin?
So
before taxes?
Actually, I mean, the feasibility study looks so robust that taxes play a big part in our all-in sustaining costs, which is a sort of unusual position, I think, in the industry.
How much taxes do you have to pay there?
Well, in California, there's a state corporate income tax as well as the federal. I think our projected life of mine all-in tax rate will probably be in the mid 20% after depletion accounting. After
that's okay.
It should be okay.
Yeah.
Again, this is one of the advantages of being in a first world jurisdiction. The tax rates are, there's a lot wrong with the U.S. tax system, but the tax rates are predictable and not going to change once you build the project. So all-in sustaining costs are really, by the feasibility study numbers and using the feasibility study silver credits, expected to remain in the sort of sub $800 level.
Well, that's still a nice margin at this environment. So even if the gold price goes up, you have a nice option for the future. So when will you really start then with commercial production?
So assuming that the financing comes in place around the end of the year, which is what the company is shooting for, it'll be a roughly 18-month construction process. And so assuming that we're able to start construction really very early 2014, we'd be in production by mid to late 2015.
So we can say commercial production latest first quarter 2016 probably.
That it's right now we're done with the permits. It's subject to financing, and if financing comes together, a 2016 date.
Perfect. What is the short-term game plan? Like, let's say for the end of the year and maybe the first 2 quarters in 2014?
So
financing, of course, that's for sure.
That is basically by far the biggest thing. We're going to be updating the market on the construction work that we're doing on site right now. So with the money that my family put in July, we're basically doing site infrastructure work. So building roads, grading the site for
preparing the whole thing already.
Exactly.
Very good.
So there will be updates as that work comes to conclusion. We'll probably be starting work on some of the first workshop warehouse type buildings by the end of this year as well. The big thing that everyone's going to be looking for is what the financing looks like.
Of course. Well, then we wish you good luck for the financing, and we hope and keep fingers crossed that we have good news from you in the future.
Thank you.
Thomas, thank you very much. Ladies and gentlemen, you heard it. That was Thomas Clay, the director of GoldenQueen. They are now in the financing process, and let's keep fingers crossed that all goes well the next 2 months, and then construction period of 18 months. So we can say late 2015, there's another gold mine and silver mine in production, but it's California, it's first world, it's in the US, so safe jurisdictions, and as Thomas said it, foreseeable tax structures, which is always a big issue, and We keep you informed about the company. Make up your mind about it. Thanks for watching us. Bye-bye.